Right. I do want to get your sense on the JPY, because we're pretty much watching it every single day in what could be a policy transition if that were to come by with any sort of tweaking in the yield curve controlled by Governor Ueda. Do you think that's in the works or not quite? He wouldn't do anything to rock the boat right now.
Yeah, not yet. I don't see why he would go from these comments about continuity and inflation falling back below 2% over the next couple of years and then deliver a big surprise. Having said that, we're only 8 days away from their quarterly update in terms of forecast, so there'll be nerves at least, because the risk reward on dollar yen is very much to be short going into these meetings, just in case they deliver another December style shock. So that's where the next big move in dollar yen is likely to be, to the downside, but probably not next week. And we think if the Fed does go in May, then that buys a bit more time for dollar yen. So we'll be able to push higher perhaps through the northern summer a bit. But as I say, you want to be very wary going into each of these meetings, because at some point the yield curve control will end.
Yeah, at some point, but I think the market is deliberating and debating when will that be. When do you think?
Look, I'd say it's unlikely to be before, say, Q4. I just don't see the inflation dynamics changing before then. It might even be a case of next year. So they'll be looking at the wages pressure. Is there any particular self-sustaining inflation there? Because the base effects on headline inflation are starting to roll over, and that's a global phenomenon. But that's going to mean that inflation is no longer above target, and that it does push lower. So certainly one to be watching, but yeah, I doubt there'll be anything major before at least Q4.
I've got to ask you, because from a fundamental perspective, you're suggesting that you're looking for the DXY to trend lower, so the 98-100 area. But when you look at how a lot of the money is positioned when it comes to expectations, yes, the rate hikes are being priced. You're seeing a lot of hedge fund money also betting on tech's capitulation and also going long dollar. Do you think that there's any kind of prevailing circumstances where you would see any rationale for the DXY to head back up to 105, 106?
Yeah, for sure. Look, it really overwhelmingly comes down to what does the Fed do. I know that's obviously a topic for every day of the week, but I think that the price action tells you that the US dollar is more reliant on interest rate support than many other currencies are on their central bank's decisions. So in the case of dollar index, its weighting is heavy on the euro. It's about 57%. So what the ECB does is very important, but there is a huge amount already priced into the ECB. I think we're talking about something like 85 basis points over the next few meetings. So there's certainly scope for US inflation to be more resilient than the Fed would like, and meaning that they need to do more. And perhaps the market gives up on the notion of rate cuts before the year end. So that would certainly be a big support for dollar index.